I still think Bitcoin, even though it's not an equity, I think it has certain growth stock characteristics in the sense that you're buying into the idea that this protocol is going to be more important 5 or 10 years from now.
Hmm.
So when that's going up, usually Bitcoin is having one of its big bull markets. So I think in that regard, Bitcoin has less geopolitical risk. If anything, it's kind of insurance against certain geopolitical risks. Whereas I do view the Bitcoin network as a verification medium. So I like both gold and Bitcoin as part of a diversified portfolio. Kind of the framing that I use for a diversified portfolio at the current time is a three-pillar portfolio. So one pillar is cash equivalents of various types. That can include things like T-bills, money markets. Um, Another pillar is long-term compounding equities. So equities you're happy to hold for 5+ years. They could be dividend payers. They could be kind of profitable long-term growth stocks at reasonable valuations. That's kind of historically a very attractive place for long-term compounding. And then the third pillar would be basically commodity exposures or hard monies, which is more of an inflation hedge, but then also would include assets like Bitcoin and gold that are, protections against ongoing currency debasement, potentially superior monetary systems that are gaining adoption over time. And so, when we look at, let's say, like $45,000 price targets, if you look at Bitcoin's price action historically, it's very correlated with liquidity. So when that's going up, usually Bitcoin is having one of its big bull markets. And obviously, there's two big drivers of global dollar-denominated M2 broad money, which is either you get a big expansion of money supply itself, or you get a weaker dollar. Because that's the unit of account that you're measuring all these in. So if you get a stronger dollar and you get ongoing quantitative tightening, that's generally rough for Bitcoin. And if you look
Yeah.
at this big kind of mini bull run we've had, where Bitcoin came off its lows, nearly
Hmm.
doubled. The dollar peaked back in the autumn, the dollar index. And because we've had the Treasury general account pouring money back into the system and offsetting the Fed, that coincided with somewhat of a bear market, or at least a cyclical bear market in the dollar, which has given a bid to assets like, Bitcoin, gold, things like that. And so I think the next, say, 6 months, next 12 months are really going to highly depend on liquidity dynamics, which again will come down to a handful of people. But if you ask me what I think Bitcoin looks like in 2 or 3 years, and probably gold as well, I think that's a clear picture. And in that time frame, I'm certainly a bull. So I think we can kind of break that into three components that then when you solve them individually, you can kind of put them together into a whole. So one is the underlying growth itself. The second one is valuation contractions or expansions for those equities on that growth. And then the third would be just baseline monetary debasement. So what is your unit of account doing? I think you have to be kind of selective and sober when thinking about the say the 2020s performance of some of these names. I think that there will be winners, there will be losers, but you have to make sure you buy at a reasonable price if you expect to hold long term and make money. So I rotate over time as valuations get more or less attractive, and I also consider certain things like geopolitical challenges, right? So if you have a growth stock but it's heavily reliant on Chinese supply chains, you have to kind of
Right.
weigh the risk of a kind of a tail risk happening to that in the next 5 or 10 years. Um, I think that, well, let's say Nvidia, for example. So Nvidia is a currently popular growth story, but I mean it's screamed vertically higher,
Hmm.
very high valuation. I think it can grow into that valuation over time, but I wouldn't chase it here. I think an interesting story is Taiwan Semiconductor, because
Hmm.
who makes Nvidia's GPUs? Well, it's
Yep.
Taiwan Semi. It's trading at half the valuation as Nvidia is. One of the risks of Taiwan Semi is, of course, the geopolitical tail risk I just mentioned. It's possible that Taiwan Semi is a little bit undervalued and Nvidia is a little bit overvalued, because I think one is carrying all the geopolitical risk, even though they both kind of are tied at the hip there. And actually, they're not all equity based. I mean, I still think Bitcoin, even though it's not an equity, I think it has certain growth stock characteristics in the sense that you're buying into the idea that this protocol is going to be more important 5 or 10 years from now
Hmm.
than it is now, and that therefore you can have your slot on the network. So I kind of also consider that one of my growth holdings. So I think in that regard, Bitcoin has less geopolitical risk. If anything, it's kind of insurance against certain geopolitical risks. So one of the major selling points of Bitcoin is the idea that you can self-custody money and then you can bring it anywhere in the world with an internet connection,
Mhm.
which as an American doesn't seem super important on its surface.
Yep.
The billions of people in the world that are in either smaller countries, more inflationary countries, more authoritarian countries, any just time they might want to, for whatever reason, bring their assets around. It's Bitcoin is the least friction asset to be able to bring with you. Other ones can get blocked by all sorts of capital controls and frictions and confiscations and things like that. So I think that's actually a point in its favor. Number two is that it doesn't have profits. It's a network. But for example, if you were to have some of these tail risks like China and the United States have their relationships break down, these companies with very big installed asset bases in China,
Hmm.
like Apple or Tesla,
Right.
things like that, I'd be more worried about those assets because they're at a pretty high valuation. They have this tail risk that could be their operations, like just absolutely massive damage, whereas the Bitcoin network is more nimble, more decentralized, not reliant on profits. So if you do get that kind of war or that kind of breakdown scenario, I think Bitcoin would be volatile. And I think that the biggest risks kind of against it are, say, US or European capital controls, them viewing it as a threat. But I think as part of a portfolio, I think it actually has a different risk profile than you get with some of these other growth stocks, even though itself is a growth technology. So I think we can separate it into the two parts, which is inscriptions and ordinal theory.
Hmm.
Putting arbitrary data in the Bitcoin blockchain has been there since the beginning.
Yep.
It's had various forms along the way. It's had periods of being a fad and then going away and then coming back in a different form. So I do think that kind of another way of framing Bitcoin is that it's the world's most decentralized and immutable database. It's basically a true time chain. Unlike a proof of stake network, it's basically the combination of small nodes and proof of work makes it this kind of like digital time capsule. I think it does make sense that there's a variety of things you might want to put in there. And so you can even put in other things like, just applications, code. If you want to preserve a certain type of code, if you want to prove, Michael Saylor used the idea, if you want to use Nostr, but a million AI spin up their own keys, you could, put your public key into the Bitcoin blockchain, say this is
Yep.
you, and not a million of them can do that, or at least not in a rapid period of time. There's a cost, there's a micro cost or a moderate cost associated with doing that. And so I do think that Bitcoin blockchain is useful in that sense for non-transaction data. As far as ordinal theory specifically, I mean that's somewhat separate than just putting inscriptions. That's a claim on ownership. It's basically a way of ordering satoshis, ordering the smallest component of the network. Um, I'm not a huge fan of this kind of speculative fervor we've seen. I think that this is somewhat spammy, but I think it's burning itself out already. Whereas I do view the Bitcoin network as a verification medium to be of usefulness. So
Hmm.
whether it's decentralized identity, like DIDs, or
Right.
whether it's kind of the Sailor example of using it to put a key document or a key, burning one side of your key pair into it to prove that there's a cost associated with it. I think that is worth exploring, and it's not the first time it's been explored. One thing to ask is what's going to be disrupted by AI,
Hmm.
and avoid that. Right. So sometimes a trend you don't have to participate in directly, or it's not your only concern. It's also what can I continue investing in that's not heavily hurt by it. So I think for example, a theme that I've been emphasizing is that for decades now, people generally underestimate software growth and how impressive software would be over a multi-decade time frame, but they overestimate hardware. And so I'm kind of going under on any sort of like anything that kind of really has to interface with the real world. That's more of like a longer grind. Um, and so, I think that commodity exposures, infrastructure exposures, they're still mostly unchanged in an AI thesis world.
Right.
At least, talking about investable time horizon 10 plus years. Um, it's mainly like the kind of the administrative stuff that I think is prone to disruption. So if you can, anything that's like overhead, I think is prone to disruption and streamlining and improvement. The Nvidia side, I think, is already kind of fully priced in.
Hmm.
I think there may be other opportunities there. And then from there, I think the next question to ask, maybe the play that's not fully crowded yet, is to ask what becomes way more accessible now that this technology exists. And an example I've used is that, say, Adobe Photoshop is a fairly advanced piece of software. it takes a good amount of training and experience to use it properly. It's not rocket science, but it does
Right.
require a decent amount of training, and that's true for a variety of their products. It's also true for engineering software, coding software. These things all take kind of training and skill to use properly. And one thing that AI does is that it takes a lot of the tedious parts and makes them way easier. It makes all of these types of things 5x or 10x more accessible, right?
Right.
So obviously there's still a component where if you're a trained person, you're going to be more effective at the software than someone who's not trained. But the floor that you need to be effective with it is way lower now, and so a far greater number of people can use these types of programs in the years ahead. And so I think that's a story that's I'm not seeing covered as maybe as enough of it should, is that I think we're going to see like existing brands, existing aggregators whose products are maybe workable by 5 or 10% of the population become workable by 20 or 50% of the population, and that in general the creator economy across all media, so art, storytelling, programming, engineering, that becomes a bigger pie that more people can do, and that the tools that serve them have now a bigger market.